All right, we are live for a Friday edition of the Mike and Mario Show. Excited to connect. Looking forward to chiming on a lot of interesting subjects from this past week. So, Mario, how you doing, my friend?
I'm doing well, Mike, and you?
I am excellent. Always excited to connect with you, my man, because we do our best to try to inform and educate and to awaken the masses as best as we can. And so it's always good to counter the mainstream misinformation. But other than that, everything is well, my friend. Looking forward to it. So it looks like asset price increases globally is catching headwinds. And so I want to touch on that, get your thoughts, share some graphs, share some charts, and of course, open it up for questions and whatnot from the audience. So welcome to the live stream. Let's jump right in, Mario. So how you want to start off this afternoon, my friend?
Well, maybe you could show the clip of Joe Biden this week.
That sounds like a good one. Okay, let's do that one. All right, so let me pull this on the screen. Go ahead. Let me get this ready. So let me prepare this one. So definitely looking forward to this. So for those that are in the chat, let us know where you're watching from. Give it a thumbs up, all that good stuff. And get ready to buckle down because it's going to be a entertaining one, I must admit. Let me share my screen here so I can get this right. All right, there we go. So just let's listen to Mr. Joe Biden. So Biden gets asked about inflation. His answer is incoherent jumbo jabble. Is what jumbo jambo is what this particular person said here. So I'll play a little bit of it, and you guys let me know what you guys gather from this.
Inflation is temporary, but if you're pumping all of this money into the economy, couldn't that add to?
No, look, here's the deal. Moody's today, when a Wall Street firm, not some liberal think tank, said if we pass the other two things I'm trying to get done, we will in fact reduce inflation. Reduce inflation, because they're going to be providing good opportunities and jobs for people who, in fact, are going to be reinvesting that money back in all the things we're talking about, driving down prices, not raising prices. And so it is, I sincerely mean this. Prices are up now, and they're up for example, you're in a position where you're trying to build a house, try to find 2x4s and lumber. Well, guess what? People stopped working, cutting lumber. They stopped doing it because the unemployment was so down. Now, all of a sudden, there's this need because people are coming back. And guess what? Instead of paying 10 cents, you're paying 20. You understand what I'm saying?
Yep.
It relates to what, in fact, is now needed because we're...
All right, that's enough of that. That's hard. That's hard.
Yeah. I mean, the problem with that is that governments... they take your money, they don't invest it, they spend it, and when they talk about infrastructure these days, it's not the infrastructure that we knew from 30, 50, or 60 years ago, building dams or highways and ports. Infrastructure now is giving help to people, giving UBI, all that kind of stuff.
Special interest.
Special interest. It's not about. Yes, his argument could be right. Maybe if the government was building real infrastructure that would help the underlying economy, but even then, it would take years to build that infrastructure, and in the meantime, prices are still going to keep rising.
Yeah, I remember seeing a while back, and feel free to chime in on it. But the idea of what $1 used by the government can do, how many more dollars it could create of actual value in the real world. And I want to say, as time has gone on, due to the devaluation of the currency, as well as the increased cost of everything we need to function, a dollar doesn't get as much as far as what the central bankers can actually produce with it in of itself, to where they literally find themselves throwing currency at all types of stuff. And then there's articles coming about how the PPP programs didn't get to where they're supposed to go. The unemployment got taken by all types of people. Here in Michigan, I heard that they took the employment pay benefits, pay bonuses to certain people in the government itself. So the funds never find their way to where they're intended to go, what we're told to go, and it's all taxpayer funds that will never be repaid. To put the nail in the coffin on that one.
Yeah, I was looking at some data earlier, because if you look back prior to, let's say, 1920, and also after 1960, you see like a big pickup in government spending
Mhm.
as a percentage of GDP.
Yeah.
And especially after 1960. And that makes sense because the 1960s, the decade, that makes sense because in 71, we went off any kind of monetary anchor. So governments could borrow a lot more. And I think back in the early 1900s, all the major Western countries, government spending was less than 10% of GDP. And now the US is just under 50%. But some of the European countries like France and Italy, they're like 60%.
Yeah.
And so you're taking more than 50% of the private sector production. And this is what he's doing. He's doing that, taking that money and giving it to his friends to projects that will basically increase spending, but at the same time, you're cutting the productive sector. You're going to get rising prices because you're going to have people producing a lot less.
Yeah.
What we need to do, and unfortunately, these people are not going to do it, be they Democrats, Republicans, Conservative, or Tory in the UK, or Labour, or whatever, or Macron, or left-wingers in France. They're going to keep spending, but what we need to do is cut the size of government. We need to go back to like a single-digit percentage of GDP. That would free up the private sector. And also, if we were to go back to normal interest rates, the other thing I was looking at, for example, in Italy, over 20% of adults are retired. But with rates at negative in the EU, they can't get any income. So if they had more income, they'd probably be spending more, right?
Yeah.
If they put 100,000 euros in the bank, instead of maybe getting 7,000 or 5,000 a year from interest, they're actually losing out because rates are negative.
Yeah.
So this is going to do is going to create even more inflation. It's going to decrease the purchasing power of the dollar. And maybe you want to show that guy in the real world who runs a business, who's seeing the price increases and sees even more coming, which is pretty scary when I read that article.
Yeah. So this article here is from FEE, Foundation of Economic Education, and it's a grocery store CEO, and it says grocery prices could rise 10 to 14% by October. Grocery chain CEO warns. And so just when you have people, as you mentioned, out in the real world confessing and admitting to the fact that they're having issues on their side, running a functional business that allows them to be profitable, to also provide their goods and services at an affordable rate, it's no longer possible. And so because of their costs, they're forced to pass those on to the average Joe and Jane, which happens to be Main Street. So as I was mentioning before, it's that disconnect between Main Street and Wall Street, because we're sold that everything is good, but Main Street is not necessarily experiencing the same level of prosperity that Wall Street is. So just the title alone lets you know what's possible. And this is real percentages based upon a real individual servicing real goods to the people.
I saw that he thinks the CPI actually is going to hit 6% there by October,
which is So it says social Americans should react to a 6% rise in consumer prices just as ferociously as they would react to having their salary cut. It's essentially the same thing.
It's like a tax as well, isn't it? It's a hidden tax.
Yeah. So that's the idea, that asset prices, consumer goods, and so I remember talking about this for quite some time, and you do as well, about how we always paid attention to the more favorable assets, your equity, your home, things like that. And also, I'm curious to get your thoughts on the possibility of mortgage rates, trending down even further, because I was listening to a commentator talking about how that's a likelihood, just to continue to stimulate more growth. So I'm not sure how that's going to play in with the debt market, but I'm curious to get your thoughts on that. But what was my point? I forgot. I lost my train of thought.
Mortgage rates. They're usually set by looking at they're set off the U.S. Treasury yields.
Yeah.
So U.S. Treasury yields have gone down quite a bit in the last few months. I think the 30-year was around 220 or something, and now it's below 2%. A lot of mortgage rates are set off the 30-year yield.
Yeah.
So mortgage rates will follow lower. They've already fallen. So it's debatable whether yields are going to keep going lower.
What's absolutely helping.
Oh, sorry about that.
That's all right.
Yeah.
I mean, I find it hard to see yields go lower, but anything's possible. We've got a stock market that's trading at all-time highs as we speak. We've got, the Fed continuing to print money. ECB came out yesterday. They confirmed they're going to stay very accommodative. There is some friction there, but the majority of the ECB committee members are for more loose monetary policy. I think they're talking now beyond 2024 as a possibility of raising rates. So it's really crazy. But the thing is, they keep convincing investors that they're going to keep buying bonds so yields stay low. But that will all depend on treasury yields. If you see treasury yields picking back up, let's say the 30-year goes back above 2% and starts moving up quickly, then you could see mortgage rates go up. They follow treasury yields. The treasury yields are the benchmark. But this economy is in the US and Europe and in the UK. Our economies are built on a mountain of credit. And the credit and the debt is getting so big that you can't allow interest rates to rise that much. So
and that's that reason I asked that question was because based upon the long-term trajectory of bond yields, they're heading downward. And of course, in the EU region, there's some countries that actually are paying citizens to take out mortgages. And it's one of those things where could it happen in the US with the reserve currency? I don't know. This is all new territory for me. And so I'm open to hearing your thoughts and ideas, just because a lot of people, it would favor a lot of people, because we know this economy and the idea of owning a home is a part of the American dream and whatnot. So if it's unaffordable, then the dream is already, on pause or dead. But I would imagine it will be in their favor to make housing still affordable so people can go out, which will only accelerate the housing bubble and everything else. So it just basically prolongs the inevitable, but yet creating a lot more pain if they can sustain this. But I think the reverse repo market, because I've been trying to dive into that more, as I mentioned, I think last week, but the more I understand, the more I gather from that, is that its desire is designed to provide, the QE was initially designed to provide credit and liquidity for the credit market. But as that stuff is being sucked out on the macro scale, and I think I might have mentioned this last week, but isn't that also going to be an issue? Because as they're creating, they're also removing. So does it cancel each other out in a sense? Because they're still buying 120 billion a week or month rather.
Yeah, they're buying that from the U.S. They're buying treasuries and mortgage-backed securities through the secondary market, the Fed. All that does is keep rates low. It keeps it keeps treasury rates low. It keeps mortgage rate low. So mortgage rates stay low. People buy homes, and that leads to higher price of homes. And then people feel wealthier. They take out second mortgages, or they borrow on the back of their homes and they spend. So it does have an impact. I'm not into this, belief that more QE is deflationary. Far from it. QE, and especially this time around from March last year, the reserve money that stays, or the reserves that stay within the Federal Reserve System and the banks, that's going straight out into non-financial institutions. And that's why you're seeing M2 go up so much. And that's cash. That's real money for us, because only banks, governments, and foreign central banks can access reserves from the Fed. And in 2008, when they started QE, that was pretty much where these reserves were kept. But since March last year, the banks are just acting as a conduit for these reserves. They're turning it into real money and lending it to people like us or other institutions, and that money is going into the economy, and that's why we're seeing rising prices.
Yeah. Yeah. And so I'm curious to find out how this is going to all play out, because that reverse repo situation, and I think it was that the investor was in Zotair or whatever, talked about the possibility of a $2 trillion reverse repo activity. And so that's unheard of. Like, do you think that's a possibility? And is that sustainable? Because there's nothing about this has been temporary whatsoever.
Well, the reason why the overnight repo or reverse repo has gone up so much is because at the end of March, the Federal Reserve didn't extend what they call the statutory leverage ratio, because the problem with QE for the Fed is that it does the QE through the banks. It can't buy treasuries directly from the Treasury. The Treasury has to go to the primary market and sell new debt in an auction. And the primary dealers, which are the banks mostly, they buy a lot of that, and foreign investors buy a lot of that. But the problem is that the Fed has done so much QE; they've more than doubled their balance sheet since March. That the banks have been left with a lot of cash or reserves, and that's created a situation where the banks are too leveraged. And with the Fed, how can I say, not extending this exemption for leverage at the end of March, they've had to take this cash and park it at the Fed. Yeah. And that's why the reverse repo is going up so much. So this is a problem of too much money. But at the same time, the Fed is keeping yields very low because they're still doing the QE. So this is just a lot of the money that, yes, it's supposed to go to Main Street, but it's already showing up on Main Street through the government spending. So yeah, as you can see, we went up to almost $1 trillion. It came back down, and it's rising again. That's the repo. This is something that is really unprecedented, and I don't even think that guy Zoltan. I think he used to work for the Fed, and then New York Fed, and he works for Credit Suisse Bank. Very few people know what the consequences of this is going to be. I would say that the Fed has created so much reserves, so much credit, so much money that it's going everywhere, and that's a symptom of it. What the result will be, the consequence is difficult to say.
Yeah, and I think a lot of this activity here, because it's obvious that it's a scramble to try to keep things operating. But then the unknowns is what concerns me the most, because I can only imagine at the end of all this is going to come that cyber event. And so I'd imagine to prevent this from completely blowing up and then making it appear that as if they're the reason for this, the lights will go out, the internet will go off, domain names will be, whatever the cyber pandemic situation that, this past week I touched on a lot about the whole situation.
Or even that variant. That variant starts with a D. Yeah, and they're talking a lot about that.
So there's going to be a new variant as needed to kind of cover up this stuff from the mainstream attention. While, of course, I think Biden was out and Harris was out yesterday, I think, doing a pitch for infrastructure, trying to sell it to different corporations or whatnot. And it's inevitable. They have to pass something like that just to keep providing the fiscal side of things. Jerome Powell made it evident that we need help. We can't do it all just monetarily. We need your help. We need you to spend. There's no amount that you could spend right now that would be not appropriate or something like that. I remember him saying. I'm thinking,
I guess another lockdown or another crisis would be an excuse to pump things up even more. So we could see the Fed's balance sheet get pumped up even more. We could see the Fed come out and say, we're going to take out this statutory leverage ratio. So, and then the banks can start keeping all that money or those reserves in their balance sheet. So we actually could see the reverse repo come down because of that. But then there will be another wave of inflation and rising prices. And it's just nightmarish because there's no way out of this, because if they start even thinking about tapering or raising rates, everything will just implode. Because as I said earlier, our economies are based on a lot of credit and debt.
Yeah, and so here's a little spiel from McConnell yesterday about his concern with, as it says here, as you guys can see, the rates not being high enough. And so unless we get the rates up, then there's a possibility. They're thrown out there, they're hinting at what we've been talking about for quite some time and what we're expecting. And actually what they need to do is to provide another cover up for trillions more to be created, because it'll be a no-brainer. And that's how this thing will continue on. So it's going to be a variant per need for more trillions. So the more trillions they need, the more variance we're going to face, and the consequences from that, while they're also pushing their agenda to make sure everybody's bagged and tagged. So
they want, it looks like the Republicans are also pushing for the medical intervention.
Yeah. And
he said if we don't increase the rates, right?
Yeah, right.
The other thing we don't know, like Rumsfeld would have said, unknown or whatever, but is that with all the medical interventions we've had in the last 6 or 9 months or whenever that started, you wonder what the side effect or also the reaction to the flu season that's coming up, in the fall and winter. It could create a lot of problems because this medical intervention hasn't really been tested for that long. So things are really up in the air, I think.
Yeah, I'll be willing to say it's never been fully tested in a real world environment ever, but even on the experimental side, according to the small lab work that was done on animals, I heard that all those animals didn't fare too well at the end of the day. But I don't think the intention was ever to actually cure or provide support for people who would come across some type of strand, regardless of what type it is, whatever name it might be given. And I think that particular injection in itself is what they want to make sure they get out there for their own sinister purposes in regards to the global depopulation agenda. That's what this ultimately will lead to, unfortunately. So, but it is what it is. We are where we are. So now it's a matter of trying to, I guess, navigate these waters as best we can. And yeah, it is interesting, man. But we are streaming live. I forgot we are streaming live. So feel free to throw a thought, a question, or anything like that, and we'll definitely try to touch on it and go from there. But I want to also make sure I touch on this article right here, because this is more of that de-dollarization undercover. But the former ECB chairman or president mentioned the need to now orderly change some things in regards to the current reserve currency status of the Federal Reserve note, aka the dollar. And what I find to be interesting about this, he's just talked about how over the last 20 years or so, that the dollar as a reserve asset has been continuously being diminished on central bank assets or balance sheets rather. And he said it'd be too dangerous to do it all at once. So we need to really begin thinking about right now strategically how to dial back on the dollar and increase in other things, and even throughout ETFs, and I think he said something about stocks and things like that, which is like, okay, so at what point does the central banks get involved in the products and services that they offer to people to prop this thing up would be the next question.
They're already getting involved in that in Japan. The ECB is buying corporate bonds. Even the Fed has bought ETFs last year.
Yeah.
So through the BlackRock program, what he talked about was that back in 2001, world central bank reserves. 71% of it were U.S. dollars, and now it's gone down to 59%, which is quite a relatively big drop, but it's been gradual. The euro reserves haven't gone up that much, 18% to 21%, but they haven't gone down. So, and he's talking about how the renminbi is still very low at 2.5%, but he thinks that China needs to make the renminbi convertible because it's not convertible right now. So, and from reading that, the feeling I get is once they make it convertible, we could see an acceleration. So we need to keep an eye on any comments about convertibility. I think that could be fairly negative even more negative for the dollar. And from recent central bank activity, especially more smaller central banks like in Asia, also in Brazil, and also the Russians with their sovereign wealth fund, they're all trying to get away from the dollar. I was surprised Brazil in June added 62. They increased their holdings of gold by 62%. That's basically a vote of confidence, no confidence in the dollar, even though Brazil still holds about $300 billion of reserves. But I think that's a signal that not just Brazil, but other countries are moving away from the dollar. And if the renminbi is made convertible, I think that could accelerate.
Now, watch this. As far as making the Chinese yuan renminbi convertible, open up their markets ultimately. It took 20 years or so for the world to, dial back about as those percentage points there. Now, do you see? And I did a video on this the other day about with the invention or the advent of the eCNY or the digital version. Because that's already operational. They just issued their first insurance policy in China, utilizing that. You can pay your premiums in the eCNY, and then people are getting paid their wages in that. They're handing it to the athletes coming for the Olympics. So it's already relatively a small mainstream project there. Now, do you think by this new form of currency, or an additional layer of currency beyond the commercial bank, the paper, and now the digital centralized control version of it, that's making 3 opportunities there. Do you think that can also accelerate the convertibility of the yuan in general, just because now there's a different form, so it can get out faster?
I don't know. I mean, I think the convertibility question is more related to capital flows internationally than the digital currency.
Right.
So we'll have to wait and see. We've got super chat there if you want to have a look.
Yeah, Chris, appreciate you, my man. It says, if Congress had the balls to dissolve the Fed due to criminal activity, what entity would run the U.S. monetary policy? Would this entity would the end result be any different than what we currently have? Thanks.
But there wouldn't be any entity running the monetary policy, Chris. It would be the market, the free market. That's what I think. The Constitution only regulates and defines the value and the weight of the coinage, and that's it. And the rest is for the market to determine. The rest is for banks and investors to determine. And why? Because a central bank basically is a monopoly, and it manipulates the interest rate. Interest rate is the price of money, so it would just work like a free market. So it wouldn't be a problem. It wouldn't be as it would be more decentralized, I would say, maybe a little more volatile, but it would be true and real.
Yeah. And I think the biggest issue with that would be we would need more than just the Federal Reserve to no longer be in charge, because you have other central banks as well, and they all work in cahoots together. So if the Fed was just to be dismantled, those involved the Treasury, they are the too big to fail bank employees, ultimately disguised as public officials. So I think they would still try to keep they wouldn't want gold and silver they wouldn't want us to go backwards towards something sound, because that would hold them accountable with their expenditures, and they don't want that. and of course the ECB will have to be dissolved as well, because those nations have been enslaved as well, and therefore, so yeah, I think that would be great, but yeah, I wouldn't hold my breath on that. But here's another. Go ahead.
I think we need to try to keep that, informing the public about how we don't need central banking. But I think if the Fed were to be abolished or dissolved, all the other central banks would go as well, because the Fed is the granddaddy, really, even though it hasn't been around as long as, let's say, the Bank of England.
Yeah. Now, here's another thought here from the alternative. It says, how was U.S. monetary policy managed before the Fed came around? A little bit of a history.
It wasn't. It wasn't.
Yeah.
It wasn't. It wasn't managed. The market did it. So let's give you an example. Let's say banks lent too much, created too much credit by buying a lot of bonds, right? Because a bond is when a company borrows money, so they're buying a lot of bonds, the banks, and interest rates go down, and then everything picks up, the economy picks up, and then what happens is you get a lot of production, and then with a lot of production and profits, other people come into the market, they create surpluses, and that drives down prices. That will create bankruptcies, because companies won't be as profitable. So people will rush to sell those bonds, to try to pay back those bonds. And then rates go up, the economy slows down, and you go through these cycles. It's like a business cycle. It's done through the law of supply and demand. Yes, there will be booms and busts, but they will be very short-lived. Yes, I guess the U.S. Treasury, before the Fed, might have gotten involved, try to interfere in the free market. I guess a crisis like a war, like the Civil War, that gave them the excuse to intervene and to stop, to start creating the greenbacks out of thin air. But basically the way it works is through the free market, through supply and demand, through the business cycle. And interest rates and bond prices are the indicator that they're the thermometer. But nowadays the Fed is interfering in so many things. They've manipulated the market so much that it doesn't even resemble a free market anymore.
Right. Very true. And then also, I think from a historical standpoint, during that earlier time frame, we were on a bimetallic standard for the most part, to where it was just common. People didn't realize gold and silver was money, and everything else was literally a derivative or credit, as that quote from JP Morgan says. But yet we had a lot more options before the banks got control and took control rather of our monetary system through the creation of the Federal Reserve System. So, well, before that, I think that the what then was considered the too big to fail banks, JP Morgans, and that we had a lot more banks as a choice, but yet that was dwindled down slowly but surely to where now we got just 7 or 8 in this country. But yet we used to have thousands upon thousands that actually had what was considered like free banking, where you deposit your gold and silver. You might get a receipt referring to a piece of paper as a bank note that you was able to move in circulation. So there's a lot more options then, because that was, I assume, what the free market demanded. But people always knew at the end of the day, you wanted to go back and get your weight. You didn't want to be stuck with a piece of paper, which is a claim.
And I think even then it was risky, because if they thought that one of, let's say, the Topeka First State National Bank or something like that, people felt that they lent too much money, and they were holding a lot of their notes. Yeah, they would rush to get their gold out. There's people knew how to. What things were doing. They had a feeling for the markets. Nowadays, it's very hard because it's all the only people that know what's going on are the too big to fail banks, because they're connected to the Federal Reserve. Right. They get a nod. In Europe, it's the same thing. I heard a story of a big hedge fund manager here in London. I'm not going to give names because one of my colleagues used to do a lot of business for this hedge fund. And we heard stories that this guy would travel to Frankfurt to meet the ECB. So why would a hedge fund manager need to meet the ECB? Well, because the ECB at the time was trying to keep, it was during the European sovereign debt crisis. They wanted to keep interest rates low. So if they could give a nod to the hedge fund groups to buy futures that keep these rates low, that would help. And what would the hedge funds get in return? Well, they make big profits because they knew they were following the ECB policy. It was a win-win, front running. So, but if you didn't have central banks, it's harder to manipulate. It's harder to for people to get inside information and all that.
Yeah. I got a super chat here. I'll touch on this in 1 second, but to piggyback more on just the historical journey that led to us having essentially controlled monetary corporations, the banking crises was this primary thing that was sold to the American public, especially the need for a single source to control and alleviate these contractions of credit during the boom and bust cycles, because the banks would extend a lot of credit, then they'll call those debts in, creating more of a credit squeeze or a credit crunch. And so every looks like 7 to 11 years, there was a banking panic in the U.S. And of course, that led to the further power grab of banks, as they would literally loot farmers, take property as a way of making calling in some of those loans. But I think prior to, we got the 1901, 1907, and that's when the whole Jekyll Island situation came about. And from that was the Nelson Aldrich plan, which turned into the Federal Reserve Act. And that was all disguised to alleviate banking panics. And so once again, after the Great Depression, that's when we had our last official one, because the rest were all Federal Reserve induced.
Yeah, I would say the Great Depression was several, Federal Reserve induced as well.
Yeah. So, this is our history, man, of how our country was hijacked. Basically, the banking sector caused the problems, and then they came in with a solution. Let's just centrally control under one entity, spread out 12 banks.
And I think, a lot of people back in the 1800s, a lot of people didn't even have bank accounts. You didn't need bank accounts. This idea that everyone needs a bank account is like very modern. A lot of people just kept their money. They kept their silver coins or gold coins. So
and to speak on that further, I remember when I was younger, like my grandmother was telling me how she just didn't trust banks. Like it was just one of the things where most people, I guess, in the South didn't have, much to really lose anyway. But it was like whatever you did have, you kept it in your own hands because you couldn't trust the banks. And of course, a lot of that had to do with the racial divide, I'm sure. But a lot of people just did not grow up trusting banks. So the idea that now they're preaching the unbanked, it leads to inequality and all those other labels they're trying to sell us on.
It's the opposite. It's the opposite. Banking, leaving your money in banking makes you poor. That's what I'd say. Yeah. So, Mario, what is the
true temperature in France with the new V regulations coming?
Well, I'm not too sure because I'm not in France, but from what I've seen, there's been a lot of protests already about that. And I've seen that there's talking about that in Italy as well, bringing new passports for health passports. And we've seen some protests in Italy as well overnight, I think in Turin. I don't think it's going to get better in France. You're going to see more and more. I don't think the French want these passports.
Right, I'd agree. And I'd be willing to say I don't think not many nations or any nations really want to see these unless they are bought into it. They believe that it is necessary. But once again, whether you have participated or not, it still doesn't prevent or cure. So you still can transmit even on the plane with your passport in your hand. You still could give away something that could cause other people to get sick.
The question here is whether internally you need a passport is something that's really doesn't, it's anathema to human freedom, individual freedom.
Right.
That's something that you needed in 1930s, 1940s Germany, right? You needed to show your paper everywhere. It's not freedom.
Right. And so I think that was, I think it was France that mentioned that in order to go to the nightclub or something
No, it
like
was
that,
here.
it was in
Here.
the UK.
Yeah, it was
So
Boris Johnson. But I don't think that's going to get any traction here, because even some of the people in his political party are totally against that.
to visit the Eiffel Tower, according to this article released on Forbes yesterday, and restaurants are next. So, like, you're outside, like, so why would you need to go to? I mean, why would you need a passport to go outside to the Eiffel Tower? Interesting. So this is just complete nonsense. It's madness. I must admit, this makes no sense whatsoever. And that's why I think the people are on the streets right now. But of course, it's not being covered on no mainstream sources anywhere in the world, because they don't want people to realize that there's people that's voicing their opinion against the narrative.
There's a lot of people against this, and the mainstream media is trying to ignore it.
Yeah. And that's why I think it's important for those that are tuning in, those that are watching this, to always be willing to reshare these articles.
That sign there says in French, the one in front of the building.
Yeah.
It says, "I'm not anti-vax. I'm pro-choice."
Yeah, and then I see
and
a QR
the other
code.
one says, "I'm not a QR code." Yeah,
I am not a QR code. Man. So, and that's where I've been trying to share my concerns with how laid back and relaxed we are here in America, because we are what appears to be the last nation that has the ability to speak freely without outrightly being told what we can and can't say just yet, even though the misinformation push is starting. I think they're looking to pass a bill on the tech companies with Facebook, saying that they need to do a better job of curtailing and eliminating and silencing misinformation due to the whole health situation. And of course, it'll start from Facebook. It's going to go to Instagram because they're same company. It's going to go to Twitter. It's going to go right on down from the top centrally controlled social media spheres all the way down. And then once that happens, that's everybody's ability to connect directly via social media.
That's the First Amendment being flushed down the toilet.
Yeah.
The freedom of speech, which the UK doesn't really have a written constitution, but the common law is that people are free to speak. And that's also being chipped away at over here.
Somebody says, "Man, stop it. The U.S. is fried. There's nothing good about this country." I disagree, man. I disagree. Look at the rest of the world and see how bad things are there. We still have a smidget of opportunity and choice here. It's just, can we get enough people to wake up in time to realize? Because as Mario just mentioned, the First Amendment is one of our God-given rights that we still do have, and then the right to bear arms is the second. We are still the most heavily armed population on the planet, and so everything that they're going to do through us to the next year is geared towards stripping those from us. And it starts with this misinformation narrative is the free speech part, and then we've had a lot of firearm events happen in this country mysteriously now. They've always been here, but the mainstream news is shining light on it. There's a baseball game the other day where people were shooting outside the stadium. It made all mainstream news subjects. In DC the other day, they have a no gun area and gunshots went off downtown or something like that. So it's like, why are they bringing this to our attention now as if it's new, other than the fact they need to curtail and step in and help us out with guns? But they're still in our hands as of now. So, yeah, so whatever that's good for. So we'll find out. But we still are able to protect ourselves. Now the question is from who? But I'll digress. Anyway, let's keep it going. Here's a thought. Here it says, "Get that vax to get your spike proteins up."
All right.
Oh my goodness! I've been to Eiffel Tower, my everything $1 back in '96. My father took me and my sisters to Europe. Yeah, I've gone twice. I think. Yeah, I've gone twice to Eiffel Tower. And not much to see, really. I had to. You got to pay extra. You got to pay extra to go to the peak to take the dang elevator. I'm like, well, I want to go up there. I don't really care. But anyway, it's fun. All right, let's keep it moving. All right, so all right, what else you want to talk about, man? We've been going about 44 minutes, having a good time as always. Always stuff to
Yeah,
cover, man.
I mean, I think that in the UK as well, there's a quite a big minority of people that are against what's going on. So I have hope here as well in the UK that we'll be able to get back to pre 2020. There's still a lot of people with common sense, even though they're not being given a platform either. And I would say the big tech companies, they're here as well, and they're censoring people. And that's how the government's getting away with it.
Yeah, so here's the question here. It says, the question is, I guess, wake up before what? And I would say wake up before you get to the point where you realize that your rights have been taken from you altogether. Like a lot of people in this country don't even realize and just look at if I'm on Facebook, just look at your Facebook feed. People are still thinking that things are going to go back to normal, not realizing that this is all a setup to slowly but surely remove the last little bit of freedoms we do have. So when I say wake up to really what's going on around us, that this is an intentionally planned event to do certain things, which happens to be at the end of the day, the reformation of the Constitution, or the complete strippage of everything to do with our Constitution and Bill of Rights. So that's what I think people need to wake up from, because literally people have bought into the idea that we're going back to normal. And I don't think that that's a part of their plan. And that's what people need to realize.
Yeah, it's well said. And I think people should try to disconnect a little bit from being online and having all these apps, because that's what they want to do. They want to get everyone connected and everyone controlled digitally.
Yeah.
And yes, we're here on YouTube and doing a live stream and everything, but we need to try to get into nature a bit more, I think, as well, and try to detach ourselves from all this noise and connection.
Yeah, I do agree. Well, let's get ready to dial back then. We've got about almost 50 minutes or so. And it's always good to connect, man. I appreciate you, Mario, for blessing us this Friday. It's always good to connect. So for those that are new, definitely, Manico64 is where you can find Mr. Mario at. And then, of course, Rethinking a Dollar, anywhere you type it in. I try to make sure I'm there. But I appreciate you guys for hanging out with us. And then I see this last little super chat there. This is from Super Seems, who says, thanks, guys. See you next time. Get that weight up. So yeah, the theme is out there. People know what to do, how to protect yourself financially. And then, of course, on the other side of things, getting out and enjoying life and just living your life. You still got to live your life, even though they're trying to control it. So do the best you can to live it, have fun, and enjoy it, man. So everybody, be blessed, be safe. Mario, we will do it again. It's always fun, my friend. Thank you for, blessing us.
You're welcome. Thank you for having me on the Mike and Mario show.
Yes, sir. All right, everybody, be blessed. See you guys later. Enjoy your weekend. Peace.